8% to 21 billion. Emeka Emuwa, the CEO at Union Bank, joins me now to break down the numbers. Emeka, thank you so much for joining us. I know you have a Facts Behind the Figures presentation at the Stock Exchange. What's your key message to investors today? We continue to see the improvements quarter on quarter in terms of growth. What are you telling investors?
Basically, what we're telling investors and customers is that we've been building the bank. We've built a strong and stable foundation. We've refocused our business along three segments: our retail, our commercial, and our corporate. And we have a platform that we're leveraging on, and we are beginning to see the benefits, if you will, of that rebuilt platform.
Right, but what's the strategy in the short term? Because definitely this is a tough environment. From the numbers we've seen from many other lenders, we've seen some declines in profits. You are moving up from a base, and many will suggest that you're still in that recovery phase in terms of your growth, because your ROE is still relatively low at somewhere around 8%. So what is going to be the key driver of your growth going forward now?
Well, it will be across multiple fronts. As I said, we have our retail, commercial and corporate businesses that we're focused on. We've invested significantly in a platform that will enable us drive our retail business, make it a low-cost retail business, focus on generating more and more low-cost deposits, which we have seen some traction on over the last quarter or two. So we expect to see growth there. On the corporate segment, both corporate and commercial, there are segments of the economy that we still see opportunities. Yes, it still remains a fairly tough environment, but within that, there are opportunities that we see, whether it's geographic or a variety of business segments. We have a fairly substantial branch network up in the north, and as we see a revitalization in the northeast, we believe that there'll be opportunities there that we can leverage our network. We believe that on the corporate side, there are opportunities that will evolve as the government focuses on a number of initiatives, and we see ourselves participating in some of those.
Right. Now, your ROE is certainly growing, but like I did mention, many will say it's still relatively low, somewhere around 8%. And a suggestion is that you could probably lift that number by bringing in a lot more efficiency into the business. So, for instance, perhaps considering your branch network and seeing how you can make that more efficient. What are your cost management strategies going forward? If you can just highlight some of the initiatives you're thinking about.
Well, if you look at our cost structure, over the last 4 years, it has consistently come down. And that is even as we have expended, we spent quite a lot of money, made a lot of investments in building the platform, both from a technology perspective, an infrastructure perspective, and a people perspective. We've invested quite a bit, yet our costs are coming down because we focus very clearly on what is not, shall I say, productive costs, and we're taking that out and replacing with productive costs. And two things will happen. We expect the costs to continue to come down, but we also expect the productive investments to start to...
but what about branches? I'm sorry to cut in. I just wanted to get a sense on your strategy for branches.
Yes, on the branches, it's simple. One thing that we've done, and you'll see it in some of the branches that we've revitalized and relaunched, is we're bringing down the format. We've scaled down the format of our branches to make them more efficient and more user-friendly. So by making them smaller, right, the cost of operating them comes down. That's one. Two, we've looked at the entire network, and there are situations where we've said it makes sense to move a branch from one location to the other because where it is no longer appropriate. So we have reduced the formats overall. We have optimized the size. We have moved branches around, and all those will do two things. One is bring down the costs, but secondly, position those locations more in places where there are opportunities. Again, the way our business is configured, even though we have the branch location, in some places it's retail driven, some places we have more of a commercial banking proposition, and in others a corporate banking proposition. So it is a business proposition that will drive the format of what we have out there.
Right. A difficult economic environment. I'm so sorry. I'm so sorry. I actually thought you had finished the point. But I wanted to get to this point. A difficult economic environment here at the moment, as we're seeing, may open up opportunities for inorganic growth perhaps an M&A deal. Is Union Bank considering this at all?
No, we're very focused on executing on the plan that we set out a couple of years ago, and that is to build along our three main business segments, leveraging off the investments we've already made. So that's what we're focused on doing now, just executing.
All right, so enjoy your interaction with the brokerage community today. Emeka Emuwa is the CEO at Union Bank.